Welcome, everyone. If I haven't had an opportunity to meet you, Anton Anderson here, one of the co-founders of Elite Resource Team. Excited to be sitting down today virtually, of course, with the founder of Helios Quantitative Research, Chris Shuba. If you're not familiar with them, they've had explosive growth in the last few years. Really gotten to know Chris well and his firm, been incredibly impressed with what they've built, influencing roughly $30 billion of assets at this point. So really great story, but Chris, can we just start off for anybody who's not familiar, maybe a very brief introduction of yourself, a little bit of background?
Yeah, first and foremost, thanks for having me on this. This is fantastic. A little bit of background is spent most of my career on the institutional side of the business. So managing money for, endowments, pension funds, so on and so forth. And back in 2010, a friend of mine said, well, how do we take all the institutional capabilities of asset management and bring some of those over into the retail space? And so by 2013, that made a lot more sense in terms of just the mathematics. And so made the leap. I was working within a large advisory practice in Northern California. And then 2016 came along and enough folks had asked to plug into what we were doing. So Helios was officially born and here we are. So it's really just a transition of need more than anything else, just problems erupting in the industry and figuring out ways to solve them for lack of a better, more detailed, background and history. So.
Love it. Great story. So that kind of goes perfectly into some of the changes maybe that you've seen being in the industry. I mean, you just alluded to kind of your company servicing some of those needs, but for the advisors watching, what are some of those major changes you've seen?
The big change that we've noticed over the years has really been this focus on strengths. So for many, many years, advisors seem to do a lot of things that they really weren't the best at. Most advisors I know are very, very powerful people persons. I don't know if that's a right way to say it, but really in tune with clients, building relationships, making sure that people are taken care of. And a lot of advisors were stretching and doing things such as asset management or estate planning or accounting that really wasn't their strong suit. So what I've noticed really over the last decade is just a focus on specialization and using great outsourcing partners, but not outsourcing to the point where they're losing their differentiation. Using some form of a TAMP where every advisor has access to the exact same modeling. That's not differentiation, even though it is maximizing outsourcing. The trick has been to outsource, but yet maintain your competitive advantage. And that's really what we've seen over the last, really since 2013, since we've kind of gotten into this game a little bit. But, and we continue to see that to be a strong thing going forward.
Yeah, so is that one of, in your opinions, the biggest kind of opportunities that advisors have in this marketplace now? And if so, kind of where do you see that going in the next, 5 to 10 years?
Yeah, I mean, I think that the opportunity is kind of that second piece, which is the embracing of the differentiation part. So, outsourcing and focusing on your strengths has always been a theme across many, many industries. But what's really interesting in ours is that we embrace that outsourcing piece early on, but we all outsource to exactly the same type of solution. So the differentiation wasn't there. And that's where the fee compression came from. As more and more people were doing exactly the same thing, then clients could say, well, why don't I just go get it cheaper down the street if all I'm going to get is the same thing? And so it's evolving away from focusing on strengths and partnerships into more of how do I be as different as possible and show that to clients, articulate it in different ways. So the big opportunity is when you really are intellectually honest with yourself and look at all the advisors up and down the street and say, what makes me different and better than them? And the answer can't be my relationship or service, because that's exactly what they say. It can't be financial planning because everyone's using one of 3 or 4 softwares that are out there with all the exact same inputs. It really has to come down to a capability, something that you can do or you can offer that others can't. And that's really been where Helios is specialized, is in giving that capability to advisors that embrace both partnerships through outsourcing and differentiation. So shameless plug for myself right there.
Got it. No, really well said. And so maybe just to shine a spotlight on part of your answer there, what in your opinion is the biggest mistake or one of the biggest mistakes that you're seeing a lot of advisors still making?
Mm-hmm. Yeah, I think that the big mistake that I'm not seeing for advisors right now is they're not focusing on the economics. There is so much waste that goes on inside a financial advisory practice that's kind of mind-blowing right now. And I'll give you an example. You have an advisor that's paying a very high platform fee. They are paying an SMA. That SMA has a bunch of underlying costs. And when you think about the total all-in amount that that advisor and client is paying, it's a ridiculous sum of money. We advocate for a much smarter view of economics, where by bringing the asset management in-house, as an example, it gives you the ability to make the spread that the SMAs would have made, to use cheaper and more efficient underlying holdings in many cases, to really, really bring the total cost of investing down for the client. And you can articulate that, as well as maybe increasing revenue per client by 20 or 30%. That maniacal focus on the economics of the business, in my opinion, is really the next big frontier that the best and smartest, most agile advisors are going to maximize. And of course, how you do that is through having partnerships and focusing on your differentiation to grow your business in an economical way. So they're all kind of linked together in those ways, but economics is the big forefront right now.
Yeah, interesting. Love it. Really well said. Last question for you. I know you're going to be one of the speakers at the upcoming Elite Growth Academy. Very excited to have you on there, full 45 minutes to an hour. Just anything else that the attendees of that event can anticipate kind of seeing or hearing from you?
Yeah, I think the big thing that you would expect is we really try to focus on three important areas of our business. The first one is like I mentioned, how do you differentiate yourself as an advisor and articulate it? Number two, how do you make your staff more scalable and efficient? Obviously, that creates higher customer retention. At the same point in time, creates a lot less waste in the practice. And then the third one, and probably most importantly, is how do you have your business, I don't want to say bulletproof, but dramatically mitigate the compliance and regulatory risks that exist within a practice, especially the asset management part and other services. So we're going to go through all three of those, and hopefully on the other end, it's a beneficial 45 minutes for you.
Very good. Looking forward to it. Thank you so much, Chris. Really appreciate your time as always, and look forward to connecting with you soon. Thanks, everyone.